Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, April 7th, and not much on the economic news releases today, but more technical. So we'll go ahead and take a look at the economic news release. We had the weekly jobless claims came in at 382,000, so down a little bit below the estimates and down from the prior week. So those are the jobs situation's looking a little bit better. As a matter of fact, if you can see down towards the bottom of the technicals, a lot of companies are now starting to say they're going to be hiring thousands of jobs this year, including McDonald's, which they estimate to be hiring approximately 50,000 jobs, which is phenomenal. Uh, and then you got companies like Intel, Home Depot, and Deloitte. Home Depot could be a good eye there because obviously they're in the housing industry, and that's what's kind of keeping our GDP from growing a lot more than what it really should be. And the housing sector has been pretty weak, so they must be seeing a lot more improvement. So they're bringing more people on at Home Depot as well. So that could be a good sign for us as well. One of the big news right now is that another earthquake hit off of Japan, off the northeast area at 7.4 this time. And of course, there's tsunami warnings right now. As a result, the stock market's down, fearing the possible worst again, like the last time. So our hearts and prayers are out for those people. We hope that everything turns out okay, that they are able to move on and get some normalcy in their lives, as well as our friends in the Middle East have some normalcy. So, anyways, let's go on to European Central Bank. They raised their interest rates yesterday up to about one. I believe it was a 1.25%. So the big question right now is on the pressure on the U.S. When are you going to start raising your rates, especially when we keep seeing these short-term inflationary pressures with the food and fuel up as well. So it will be interesting to see what the Fed says later this month when they get their forecast. So let's take a look at the bond market. We started a little bit lower. We had an opening gap, but we did start closing that up a bit, and we did pull off a little bit of high that we had. Looks like we are going into a downward trend. With all these global concerns around there, with the debt crisis in Europe, even a big thing in the U.S. where we're possibly having a work stoppage on Friday with the government. That's also pretty serious as well. So usually this would be bode well for bonds, but for whatever reason it's not going in there. A lot of it has to do with the Fed. The Fed's their concerns about possible inflation, and the Fed, they don't feel that maybe the Fed's doing enough, being as hawkish as they should be, fearing that this even the short term is going to affect the long term more dramatically than what the Fed's probably estimating. So as a result, rates are about the same as where they were yesterday. As we can kind of see, we're kind of a level playing field, so the interest rates or mortgage rates are about the same. All right, folks, anything else major happens, I'll get back to you, but otherwise I'll see you tomorrow, Friday. Take care.